morning, I'm James Sheehan, CEO and Managing Partner of Island Park Private Wealth, and welcome to this week's Monday Morning Market Update. Markets were mixed last week, as leadership kept rotating beneath the surface. The S&P 500 dipped slightly, and the Nasdaq fell about 2.5%, as investors rotated out of technology stocks, which dropped over 4% on their own. But here's the interesting part. 8 of the 11 S&P 500 sectors actually traded higher last week, led by energy and consumer staples, and value and equal weight stocks both outperformed. So while the headline tech-heavy indexes look soft, the average stock actually had a decent week. Let's get into the themes driving markets right now, starting with inflation. The consumer price index fell 0.4% in June, the largest monthly drop we've seen in more than 6 years, pulling annual inflation down to 3.5% from 4.2% in May. That's genuinely good news, and it traces almost entirely back to a near 10% drop in gasoline prices. But here's the catch. That relief reflects a window when oil was falling. Since the start of July, crude has already climbed back toward $80 a barrel, so June's improvement is real. But it's sitting on a foundation that's already started to shift, and the central bank has signaled it may need to raise rates. Turning to corporate earnings, Wall Street banks kicked off Q2 earnings season with genuinely record results. All that market volatility we've been talking about actually worked in the bank's favor. A wave of deal-making, the $75 billion SpaceX debut, drove revenue higher. Goldman Sachs posted the best quarter in its history, and JP Morgan grew earnings more than 40% year over year. Despite all this rotation, the broader market has actually held up well. Semiconductor stocks continue to swing sharply on AI-related questions. But as money moves out of chips, it's rotating into areas like financials and industrials instead. The S&P 500 is trading within 1% of its early June record. The VIX sits calmly in the mid-teens, and credit markets remain steady. In other words, volatility hasn't dragged the broader index down with it. On the consumer side, spending held up in June, even as the pace moderated. Retail sales rose 0.2%. Most of that slowdown traces back to cheaper gas. Strip-out gas stations and sales actually rose 0.7%, helped along by Prime Day. So the consumer is still spending, just adjusting where those dollars go. Looking ahead to this week, we've got a lighter economic calendar, with the leading economic index and new home sales data all on deck, each giving us another read on the back half of the year. That's your Monday morning market update. As always, if you have questions about your portfolio, please reach out to our team directly. Thanks for watching, and have a great week ahead.